Good morning, everyone. Once again, this is Black Forex coming to you with another market analysis video currency breakdown. This morning, we're going to be looking at the USDCHF. But before we start to break down this chart and this currency pair, we have to state that this video is for economic purposes only. This is not financial advice. But we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and help put a little bit of extra money in your pocket, especially during these troubling economic times. So, with that being said, let's go ahead and break down this chart and this Forex pair. Okay, so before we dive into the technical analysis, which physically happened on the chart, let's go ahead and give a good, concise breakdown on the fundamentals of each respective currency, starting with the CHF. Now, we did not have a lot of news come out about the Swiss franc throughout this trading week. We were operating on the news prior that came out the latter part of last trading week to see what our fundamentals was for the CHF, which technically it was some very good news. So the CHF did have technically good positive economic news, okay? But recently, as of 1:45 in the morning Eastern time on Thursday, we did have some unemployment news come out about the CHF. And these unemployment numbers they did come down. This did come down. Okay. The unemployment percentages did come down, which means technically that there's more people working and less people not working. Okay. So even though that is considered some good positive news, we have to look at the overall shadow that's hanging over the Swiss franc, the Great British Pound, and the Euro, which are all the major three European currencies that's used in Europe. And that overall dark shadow is inflation, high gas prices, and also the sanctions that they're placing on Russia and the Russian-Ukrainian conflict. Okay. Now, the inflation and the high gas prices are all being catalyzed by the same event, which is the Russian-Ukrainian conflict. Because one thing that NATO and the United States are trying to do is they want to punish Russia through punishing Russia's economy. So they keep placing sanctions on the Russian economy on it being able to trade its goods and its raw materials, and also putting sanctions on its gas and oil and natural gases. Okay. But each time they've placed these sanctions on Russia, it has a reversal ripple negative effect on NATO itself. Like NATO gets hit hard by these very sanctions they're trying to place on Russia. Because, I mean, Russia is getting somewhat of a hit too, but basically, Russia is selling their goods pennies on the dollar to China, India, North Korea, Brazil, and Venezuela. These countries. So they may not be able to sell it to high their goods at high prices like they're accustomed to doing to majority of the world like they're accustomed to doing, but they're still having people buying their goods, which means that the hit that they thought was going to devastate their economy is just kind of slowing it down, but it's definitely not devastating it because some Russian news came out last night that showed that Russia actually lowered its interest rate, and if the economy was doing so, they actually lowered its interest rate. And if the economy was doing very, very bad, they would actually increase the interest rate. So they're lowering their interest rate. So I mean, it's if they thought it was going to be doing what they was going to do, you'd have been seeing Russia increasing its interest rates. Okay, so with that said, we're going to see a continuation of the weakening of the major three European currencies, with CHF being one of those currencies. Okay. Now, also, with that inflation, we also have the overall FUD that's surrounding the entire European continent's economy through the destabilization of the Russian-Ukrainian conflict. Okay. So right now, nobody can trust the economics in Europe because they can't tell whether Is this conflict going to stay within Russia and Ukraine, or can it spill out to the whole of Europe? And as long as this conflict continues, they're going to keep placing sanctions against Russia, which is going to have a negative effect on the entire European continent's economy, because one of Russia's, or used to be one of Russia's major customers for its raw material and its natural gases and oil and its goods was Europe. They used to buy a lot of their oil from Russia. They used to buy a lot of their raw material from Russia, such as metals, rubber, um, lumber, all type raw materials like this. They used to buy it from Russia. So them sanctioning themselves from not buying it from Russia means that the businesses in their respective countries now have to look elsewhere and pay even higher prices for raw goods, which in turn they put these higher excuse me, which in turn they put these higher prices on the consumers in their countries, right? Which continues to raise inflation. And also was also catalyzing inflation in Europe, which is a catalyzing inflation here in America as well, is the high gas prices. Okay, so their gas prices are extremely way higher than what it is compared to America. To give you a sense of context, if you're on the East Coast, gas has been ranging between mid to high threes to low $4. Okay, over there in Europe, they're paying basically West Coast prices, almost like 9, 10, $11 a gallon. And it's because that they used to get a lot of their natural gases and oil from Russia. Fortunately, we have Canada right here, which is a major oil producing nation, and we could just supplement our oil that we're not getting, that we used to get from Russia too, from Canada as well. So we're basically kind of in the same ballpark as the European continent's economy, but we're doing a whole lot better because of our proximity is a lot different, and we have other different things we could do to substitute what we need versus Europe. They totally relied on Russia for its oil and gas and natural resources, so these sanctions are having a negative effect on them. So with that being said, like I said earlier, we're going to see a continuation of the CHF, the euro, and the British pound. Okay. Now, as far as the USD is concerned, we're going to see a continued strengthening of the USD because we did have a lot of economic news come out about the USD, in which we did have way more positive news than negative news. And then also, in turn, we did have oil news that come out that stated that the oil supply around the world has increased in circulation, which means that prices of oil went down, which means that gas prices at the pump is going down, which means that the US dollar is going to strengthen further because as long as gas prices continue to get lower, then that means that consumers have more money to spend at the store. If consumers have more money to spend at the store, that's more money going into the economy. Then that means the economy continues to go and the US dollar continues to strengthen. From a business standpoint, if businesses don't have to pay high money on shipping goods back and forth or pay high gas prices to ship their goods to stores, then that means they do not have to offset those highest prices by raising consumers' prices for goods, which means they can start to lower prices, which means that will also catalyze more spending by consumers, and we will have more money coming into the economy and a more continuing strengthening of the U.S. dollar. I know that was a lot, but this is all part of understanding the game to be a successful and consistently profitable trader. If you're willing to do a little bit more work than the next man or the next woman, then that means that that 20, 30, 40, or $400 that you make can easily turn to 4,000, 40,000, 400,000. Trust me. Okay, if you're willing to put in the work. Okay, but that's why you come here. We'll put the work in for you. All you got to do is just listen. Okay, so now let's break down what is technically happening or physically happening on the chart from a technical analysis point. So as we can see, we had a pickup in price. We came down. Then we got to this area here where price boomed up from before. And now we're starting to pick up as we stated in our earlier previous videos that right around here we was going to see a pick up in price and we can get as high as here or even as high as this area here before we start getting hesitant like we said was going to happen and before we're going to see eventually a price drop. Okay. Now we could shoot up another additional 20 to 30 pips then start getting a little hazy in the ranges, but then see a price drop. So how far can price drop? Okay, so what can we see is that we could break up here a little bit more, range out, drop to this area here, or drop to this area here, or if the retracement becomes a lot more aggressive, will drop to about this area here before we continue to go back up, okay? Or we could range out from this area right here and drop to here, here, or here before we continue to go up, okay? So the overall story with this currency is that eventually, this up move that we have is starting to see we started to lose steam and momentum. We could have a push up like the last stand before we start to see it go towards the short side. But just because we're going towards the short side, does that mean that the long term is this is going for the short side? It's just for the intermediate. We will be going towards the short side. But remember, charts are not unilateral. They have to go down in order to continue to go up. So that's the more so situation we're dealing with the USDCHF, especially if we do not have drastic changes in each currency's fundamentals. But being that a lot of the economic fundamentals in this day and age for right now is being dictated by geopolitical events, I don't see a drastic change happening anytime soon. Okay, so once again, we could pick up to this area here, range, and drop. We could range from this area and drop here, here, or even as low as here before we start to pick up and head back towards the long side. Okay, I don't see no more. Once we drop that initial drop down to either this area here or here, next target area when we start going to the long position is going to be this general area right here. Okay. Hope that information was helpful for you guys. Happy trading.